All right, welcome back, YouTube. So we're going to do a price update here on the state of the market and also take a look at some of the price action that we're seeing here across the board. So we're going to start with Dogecoin, and I know that we've had a dip, not just in Doge, but obviously across the board. But I kind of wanted to address this and what we can expect as far as for on a recovery and just kind of like the difference that we're seeing here between Doge and some of the other coins and why that is. So if we take a look here, we'll see that we had a breakdown here as far as for the major support line that we had at around the 61 on the fib, and then we had a divergence here between the 14 and the 72. This was our initial setup to do that retest at around that 42 cents mark to give us the idea of the gauge their strength to go retest this cycle's high. But obviously we had the news of the tariffs, and obviously that's not a Dogecoin exclusive thing, but we saw a sell-off across the board. We saw Bitcoin dip into like the mid to low 90s. We saw a lot of money get vacuumed out of the market. I believe several hundred billion even in a day got vacuumed out of the market. We're going to address that in a moment here, but so I wanted to put that out there. I know sometimes people are just invested in Dogecoin, or Doge represents a large position of their portfolio. So a lot of times it gives tunnel vision on what's happening across the board. But yes, that played a huge part in the vacuuming of the funds out of the market here. So we saw this pull here across the board, a really strong rejection here. This is what you would call a very powerful liquidity zone, which is going to be obviously around that 20 cents mark. This is, we almost jumped I want to say about a zone and a half, right? If you take a look at this, this is a very powerful move here from pushing up from around 20 cents to around 29 cents. That's roughly about a 10 cents move. And this is a daily candle. So that's a lot of buying pressure that went in there to turn this, to break the cycle here in this trend. The back on around the third, I'll say like the first through the third, or maybe like 31st through the third. That's a very powerful candle there to break that cycle. And ultimately, we're looking at our next major support being around that 25 cents, 24 cents, high 24 cents. So we'll just call it 25 cents mark here. And really even dip below the 200-day moving average. Now, technically speaking, if you're still in and I want to tell you this thing from a trading perspective, if you are still in any bullish type of cycle and don't believe you have peaked yet, and you're able to get an asset below the 200-day moving average, which is what I believe happened here on the third, Doge went below the 200-day moving average. That is typically the easiest time to turn a profit, right? And I believe that's one of the reasons why this candle is so strong. And that has nothing to do with crypto. That is simply just trading. If you can catch Apple below the 200-day, Tesla below the 200-day, Bitcoin below the 200-day. If you're able to catch that, it's typically really, really easy to make money. So I believe that's one of the reasons why this candle here is really strong. But overall, what we're looking at is an adjustment. And then we're flipping over to Bitcoin here. I wanted to point this out. But overall, what we're looking at is an adjustment in the, I guess you can call it like the tempo of the market, and then waiting on confirmations here of a breakthrough. So typically what happens is you'll be able to build on momentum, kind of like this stair-step approach here. As the cycle goes on, you'll be able to build on it. And then if it's not necessarily a compelling catalyst, or if it's a down week or nothing major is happening in the news to kind of affect the macro events, you'll have a period where you'll kind of trend sideways until something happens. But Bitcoin is obviously going to react first because it's going to be the largest holder of liquidity. And a coin like Doge is obviously going to react negatively when Bitcoin or portfolio allocation starts to sell off, and you'll see that trickle effect come out throughout the market. But also on the upside, the flip side of that, it's going to wait on a confirmation of a breakout before liquidity starts flowing back into the market. And I believe that's where we are now, especially with Doge. With Bitcoin, yes, we saw a dip, a huge sell-off, but it wasn't nothing that we've seen before, right? And if you take a look here, I want to say even like this entire area, it hasn't. We haven't seen anything catastrophic here because technically, since if you want to call it, so early November, we've peaked around that 105 to 109,000 a few times, and then we've pretty much been you can almost say trading within a zone. Maybe I can apply fib to this a little later, but we've been trading within a zone here for the last few months. So it hasn't been a compelling case for a major breakout or the next leg up, right? We've had these retests. Even had a bowl here between the 17th and January 20th. So the 17th of December to January 20th, roughly around a 30-day period where we even formed like this W and put like this bowl here, but and then it did the retest and went slightly higher before getting rejected. But overall, we haven't had that confirmation of the next leg up, right? And so when you have bad news kind of come in there, it's going to kind of like gut the market and take a lot of capital out. But before that, that money just simply doesn't come back in, right? For a coin like Bitcoin, obviously liquidity is going to go in there first, and you have the diehards who are going to say, "Oh my God, this is a great deal," which I believe it is, and you'll be able to recover or continue to trade in that zone. But as far as for all the other coins, the liquidity comes back when there's evidence here, when we start to build toward like a retest or there's a event in the macroeconomics here that's saying, hey, this is going to be like this big move here. There's some type of evidence. That's when you're going to start to see that trickle effect of the revenue in the economy here. Or the crypto economy, right? Another thing we need to look for is obviously the 1472. I don't think necessarily we're going to continue to see a big dip here to kind of give us like a death cross or something. We certainly came close before, and we used that range here between the 72 and the 14 before to grab support, and then was able to kind of go and run and do a retest of the all-time high. So that's something that we can look for here as well. But I do believe that we're going to continue in this zone here until we get some more of the definitions of like the macro moves here. Things like the tariff agreements that we have or the pauses that we have here over the last few days. I believe they did a few 30-day pauses. I believe that's going to play an effect as well. And if we look at the major markets or institutional levels, let's switch over. I'm going to do it from a liquidation standpoint and not on coin market cap, because we know that the entire market sold off and it wasn't really a divergence. So we're just going to take a look here at liquidations. Let's go. Right. So if you take a look here, it's especially the last 24 hours, you'll see that it's mostly the long positions that have been liquidating, right? For those of you who are watching the video for the first time, not all of the exchanges, but a few of the major ones, OKX, Binance, Bybit. So it gives you an idea of the overall tone of the market. And you'll see long short ratios as far as for buy-ins and percentages of transactions. Obviously, that's going to reflect that. It's still roughly around that 3-to-1. Shorts are still coming down to around that 24 cents mark. Typically, you'll want it to be around that 25 cents, 26 cents mark. But when you see shorts coming down to around 23 cents, 23%, like on a 4 hour and the 1 day, what you're looking at is you can kind of use that like as a reverse indicator, right? As far as for price action. So when you start to see shorts coming down, that is the short community believing that there isn't much profit left on the downside. So you can look at that and say, okay, I believe that this is, we hit a strong liquidity pocket, and they don't believe that the asset is going to go down anymore. They don't believe there's much profit there, so they don't necessarily see a reason to continue aggressively shorting it, right? And you can see evidence of that based off of how much shorts are pursuing the asset and how strong the shorts are coming into the market here. So that's what I kind of believe. I believe that we're in a situation where we're waiting on some confirmation on the macro sides to see how the institutions are going to allocate their funds, what type of panic overall that we're going to have in the market. And we even saw this is a side note, we even saw this sell off in the stock market. So and obviously the bigger coins, the bigger cap coins are typically going to recover first. Similar to the stock market, you'll have things like a Tesla or a SPY. They're going to recover relatively quickly. And then you'll have assets like an AMD, which is going to get gutted, and it's going to take a little longer to regain that ground that it had initially. Doesn't necessarily mean anything's wrong with AMD. It's just going to, it's just behind NVIDIA. So it's similar to something to when you're looking at Doge and like a Bitcoin, for example. The bigger coins are going to move first. That allocation is going to come in there and you're going to get your evidence. But the important thing is that I do believe that based off of that candle we've seen and the way shorts are acting, we have a very strong range here for liquidity and a liquidity zone for Dogecoin. So I think that we're going to do really well. But overall, we're just simply waiting on those macro events and to see how this, I'm not going to call it necessarily a tariff war, but I'll say tariff situation and is going to affect the economy and how these resolutions are going to happen going forward. And this will determine how much capital comes in and where it's going to go. So let me know your thoughts in the comment section. I'd love to hear about it. If you found any value in the video, please consider sharing it, liking it, and definitely let me know your thoughts in the comment. I want to discuss this in detail because I believe that we're going to have a lot of macro events happen this year that is going to not only shape the future of crypto, but also play a role in kind of like the ups and downs. It's not necessarily just a cycle here. We're going to have a lot of things here that are going to pivot the market here and why this cycle is different. Kind of what we talked about, because I believe that we were going to, if you've been following the channel for the last few years, it's one of the things I talked about, which was we're going to kind of see like a condensing of the market here and have a reducing of the coins that we typically see are very popular, maybe like a changing in the top 10. You'll be some new coins in there, and they're all going to fall in their prospective places when we have that influx of capital, when it kind of goes mainstream. And I know people are thinking, isn't it mainstream now? But compared to where it's going to be 5 years from now, the answer is no. But these coins are kind of defining where they're going to be, what role they're going to play, what position they're going to be in. And as that happens, you're going to see a condensing of the market here between coins that are going to be around versus meme coins that are going to come and go or be like the get rich quick thing. So let me know your thoughts in the comments, because I believe that we're going to see a lot of that infrastructure and those legislation kind of come out this year to be the guidelines for these assets. So I think that's going to play a part in the ups and downs that we see as well. So just a conversation I want to have in the comment section. So I'll be reading it, looking forward to your thoughts, and I will see you guys in the next video.